Hi, everybody. My name is Molly Snellarch. I am the Cooperative Housing Specialist with Pathstone, providing technical assistance to resident-owned communities throughout New York State. I'm starting this video series to help folks who are on boards primarily, but also community members, get a better handle on financials, because I know that's a difficult topic for folks. I think it can be daunting, can be very overwhelming, and I'm here to kind of try to break it down into manageable chunks. And first and foremost, I want to reassure you that you do not need to be a CPA or a Fortune 500 company president or CEO to have a basic understanding of your resident-owned community's financials and have that understanding inform the way that you, as a board member, make decisions and have discussions. So this overview is to hopefully make some things about the finances of your community less scary, and also help you better understand the things that make your community tick, financially speaking. And I did just want to say off the bat that you're not supposed to be the expert in the room, right? Your property manager is also your financial manager, and that person you pay to do the books for you, right? And you are holding them accountable to doing a good job there. So you need to be getting accurate and timely reports from your property manager that enable you to do your fiduciary duty, which we'll go into at another time, what that entails. But this is just a training to help you interpret those documents properly. And if you're not getting those documents, if they're not timely, if they're not accurate, please engage your technical assistance provider to assist in having that conversation with your property manager, because if you don't have the proper information, you can't make these decisions. So just wanted to off the bat say that your property manager should be a resource in this work with you. So generally speaking, the way I like to start out is by saying there are pretty much 6 things that you can get by as a board member if you know the answer to these 6 financial questions. So this video is just going to be going into what are the 6 things every board member should know. And notice how I didn't say the treasurer should know, right? I think every board member should know the answer to these 6 questions. The treasurer is there to be your sort of financial interpreter of the documents, a little bit more in depth, and we will talk about that later as well. But these are 6 things that, especially after every board meeting, every board member should leave feeling pretty confident that they can answer these 6 questions. So, question number 1 is, how much money is owed to the co-op, right? How much do people owe you? And for most folks, this is just going to be past due lot rent, right? And this is referred to on your balance sheet as your accounts receivable. And in general, we want to see this number trending downward, or staying the same is okay, but we want people to be paying you what they owe you, right? We do not want that to see that number go up and up and up, because that means you're not getting the lot rent you need and that you're relying on, right, to run your community, to pay your vendors, to pay your bills. So we need to see this number trending downward, and if it's not, again, that's a conversation to have with your property manager and possibly your TA, and say, how can we get this under control? What are we doing now? What can we be doing about it, right? So how much is owed to the cooperative accounts receivable should be a number right there on your balance sheet. Number 2, how much money is in each of our bank accounts? So these are the 5 accounts I have listed here are required by your lender. So everybody has the same lender in New York State, so they should all have these bank accounts. Some folks have additional accounts. We can talk about that on an individual basis. But your operating account, right? This is where the money goes in and the money comes out, mostly. This is the account that's going to see the most activity month to month. So all your lot rent's going to go in your operating account. Your mortgage is going to be debited from it. You're going to pay your normal bills out of your operating account. Your working capital account is what I like to call your rainy day fund, right? This is an account, it's not restricted in the same sense as the other three accounts we're going to talk about. Your lender does require that you keep it at an account minimum. Everyone's account minimum is different, so talk to your technical assistance provider about what your account minimum is. You can also find it in your loan agreement. But that's just to say that your lender wants you to keep this sort of slush fund, this rainy day fund, in case some expense comes up that you didn't anticipate that you then need to cover out of pocket, basically. Some folks never really put money in, never really take money out, some communities, I should say, and some communities use it as sort of a savings account where they put surplus in year to year, month to month, to then be able to draw down should they need it. The next account is your debt service reserve. If I call the working capital account your rainy day fund, I call your debt service reserve sort of your apocalypse fund. This is exactly the amount of 1 month of mortgage payments. Your lender requires you to keep that account at that amount. And if the world were to end and you would have no other way, no money in your operating, no money in your working capital to pay your mortgage, you would pay that out of your debt service reserve. I'm sorry. So that account should pretty much be the same every month. The only additions you're going to really see would be maybe some interest accruing, and you're not going to pay out of it again without lots of conversation with your lender about why that needs to happen. So that's that account, should pretty much be static. Replacement reserve account, that is your capital improvement sort of savings account. That is where you make monthly deposits. Again, this is determined by your lender, how much you're depositing in as part of your mortgage drawdown each month. And the money that you pay out of it has to be approved by your lender, and it has to be what's considered a capital improvement, right? Infrastructure improvement. So maybe you want to pave your roadways, maybe you need to redo a septic system, right? Maybe you need to scope your water lines and find a leak. These would be items that you could pay out of your replacement reserve, and that's sort of a separate item from your day-to-day budget, your year-to-year budget. We'll talk about that a little bit in a bit. And then your tax and insurance escrow account is just an account where your lender requires you to deposit money each month again in your escrow, and your lender then pays out for your taxes and your insurance at the time at which that's due. That's just insurance for them to make sure that those items are paid and haven't lapsed. So it enables you to not have to worry about the month in which your insurance is going to come due or your property taxes are going to need to be paid. They just pay that out for you, and they track all that for you. So every month you should be able to say how much money is in each of our bank accounts, and these should all just be on the balance sheet. So pretty easy to find. The third question is, how much money do we owe to our vendors, right? So just like you have accounts receivable, money that is owed to you, you have accounts payable, which is money that you owe to your vendors. Again, it's normal to carry a balance a little bit on your accounts payable, depending on the time of the month vendors get paid and whatnot. But you do not want to see this number trending up and up and up, because if you see it trending up and up and up, that might mean you have a cash flow issue and you are not bringing in enough every month to pay your expenses every month. And so you're just accruing debt. And we do not want to see that. So keeping an eye on that number is going to help. Asking your property manager, why is this bill not paid yet? Questions like that, those are totally acceptable and appropriate questions for you to ask. And number 4, is there a deficit or a surplus? Are we bringing in more than we're spending, or vice versa? Are we spending more than we're bringing in? And you're going to want to look at that this month, any given month at any given board meeting, and also the year to date, which should be a part of your regular statements that you get from your property manager. Number 5 is, how are we doing in relation to the budget? It's a similar question to number 4, but this question really gets at the budget variance, it's called. And that enables us to say, okay, if our budget is an educated guess of what we think we're going to bring in and what we think we're going to spend. How close were we on that guess? And in what way do we maybe need to adjust the rest of our spending for the year? Say we spent a ton on legal right away in January. Maybe we need to be more conservative moving forward if possible, to prevent overspending in that regard. So how are we doing in relation to our budget? What is a budget variance, essentially, is the question there. And then number 6, how much is being spent on our capital expenditures, so on our infrastructure improvements. Essentially, this is going to be the same as just keeping an eye on your replacement reserve balance and your loan statement and seeing, are we spending money out of there? And if we're doing so, is it again in relation to what we budgeted for? Because it is outside of your sort of operating budget, but you do need to have certain expenditures approved by your membership, depending on what your bylaws say, above a certain amount. And so you should be budgeting for capital expenditures each year when you do your budget, your operating budget, and you should be trying to adhere to that budgeting, right? Otherwise, you have to go before the membership, make a case for why you need to spend this money on these capital improvements, and then they'll approve or disapprove of those expenditures. So how much are we spending on that? Is it in line with what we planned? So those are the 6 things that every board member should know, leaving any given board meeting or be able to explain to the membership. This is the first, as I said, in a series of videos, so hopefully looking forward to digging a little bit more into these various topics. Would love to hear what folks want to know about, or dig into some of these a little bit more. And as always, I'm happy to discuss with you on a one-on-one basis, taking a look at your personal financials, I should say the financials of your community, to just pick it apart, see where we can find these certain numbers so that you and the rest of your board feel confident that you can answer these questions. You can feel free to comment below if you have some suggestions of further topics or other things you would like to see explored, or maybe some things we talked about in this video that you would like to see in a little more depth. Happy to do something like that. And as always, you have my contact information, so please feel free to reach out if I can be of service in any way. Thanks so much, everybody, for your time. I appreciate it, and I hope you found this valuable and learned a little something.